So this is how I trade support and resistances. I'm going to say this again. I think I've been saying this for some time now. But all you need to be profitable with trading is to win 5 out of 10 trades. That's all you need. Once you're able to win 5 out of 10 trades, you become a profitable trader, especially as you are going with a standard of risking 2 to 1. So it simply means that if you are trading futures with crypto, you are if you are risking $10, right? If you are risking to lose $10, if your trade hits TP, you are going to make $20. So if you keep it that simple, 2:1, and then you win just 5 out of 10 trades, you are going to be profitable, because anytime you win, you are making times 2, right? If you lose, you are losing just 1. And so once you win 5 out of 10, you are good to go, right? That's all you need to stay profitable. So I'm going to show you how I'm able to trade, how I trade, and how I'm able to sort of predict the market, right? So it's simple support and resistance, but then I draw it from a higher time frame. I draw it on the weekly time frame, right? So all I do is I go on the weekly time frame, and this is the weekly time frame. So this is what you do. Look at the area where it looks like the price is touching a lot. So look at those areas, the areas where it looked like the price was really touching a lot, right? So we can say right here, and you need to be current. So be current with the candles. And so this candle actually represents this week. This one represents last week. This is last 2 weeks, last 3 weeks, and all that. And so you realize that for all these candles, right? Let's take the rectangle. For all these candles, especially here, they are sort of basing at this particular point. All of them. So this one touches this. This one is also touches this same base. This one sort of, I mean, you can call it liquidity sweep, also came to this base. And this one also, I mean, emanating from this base. And so you'd say in the last, let's say 1, 2, 3, 4, 5, 6, 7, in the last 7 weeks, okay, this has really been the support, right, for the last 7 weeks. Okay, and now you go to the resistance, and so it looks like there's an area over here that is preventing the market from going up. And so support and resistance is mainly the area where it looks like the market is not able to break through. That's the support. I mean, the market is not able to come down and break through. That's the support. And then the area where the market is not, it looks like the market is resisting. That's your resistance. And so once you take the weekly time frame, and then you are looking at the weekly candles, you see that it looks like for the last 7 weeks, this particular area, the market is not able to come past this area. And then at the top, it looks like the market is also not able to go past this area. And so that is your resistance, and this is your support. So once you've drawn this, you don't need to do anything else. You just need to keep it simple, right? So once you've done this, you come to your daily time frame. Okay, you come to your daily time frame and see what is happening there in your daily time frame, right? So you come to your daily time frame and realize that indeed the market is respecting these areas. And so you realize that when the market touched the support, it went up and touched the resistance. And then this candle, bearish engulfing. So once you get the bearish engulfing, you know that the market is coming down because it has been rejected, right? Bearish engulfing is a reversal candle formation, right? Reversal candlestick formation. And so this right here, bearish engulfing, And so if you were trading the market and after the day you saw that the market printed this candle, you could have quickly just taken your trade from here, and then your take profit will be here. Quick. Indeed, the market touched here. When it touched here, I mean, it gave this wasn't really a bullish engulfing sign, but then the market went back up, and then when it came here, also rejected. I don't know whether this looks like an evening star. I don't know, but this is bigger than this, but it looked really like an evening star. And then the market came back down. So once it came here and then couldn't break through and form this wick, it simply tells you that the market was going back up, right? If you trade support and resistance, that's one of the ways you know. If the market, if it looked like it was breaking through any of the levels, maybe a support and resistance, and then there's a reversal candlestick and it falls back into the range, then you know that it's going in the opposite direction. Let me show you. So this one, right? Supposing you don't know anything about candlestick, reversal candlestick formations and all that. So you were expecting the market to break through. You see that the market looked like it was breaking through, and then immediately there was a pushback into the market, into this space. And so right there, you know that the market is coming back down. Okay, so that's how you trade support and resistances. So exactly like this one. So this was a bearish candlestick, but it couldn't come through. It couldn't break through. Immediately there was another bullish candlestick in the range. And so once it happens that way, you know that it is touching the resistance. Okay, and so once you are able to trade like this, once you are able to know these things, these tricks, you can trade with, I mean, you can just predict where the market is going, and then you see that exactly the market will get there. If you're able to predict exactly just 5 out of 10, you make a lot of money from the market, right? So that's how to trade support and resistances. So you can keep it very simple and just look at the daily time frames. So that will mean that you take your trade after 24 hours. Okay, some people don't have that patience, and so you can quickly just go into, let's say, the 4-hour time frame, and then you can go into the 4-hour time frame, and then you realize that even in the 4-hour time frame, for me, if I'm trading something like the 4-hour time frame, I look at double top or double bottom. So this one, it rejected, and I'll look at another rejection. When it came here, it rejected again. So that's more like the double top. And so it simply meant that the market was coming down. It doesn't mean that it is always going to form a double top or a double bottom. No, it's not always going to do that. But sometimes it will do that, and then you take the trade. So exactly like this one, it formed something like a double top and then came down. This one also, I mean, for this one, because it came down here and then went back into the range, you know for sure that it is going back up, because if it will break through and then it's going to fall, it had to continue breaking through. And so once it breaks through and then enters back into the range, quickly you take the trade. It was more like a liquidity sweep. And so quickly you take the trade and then you go up. And so if you were trading on the 4-hour time frame, you could have just taken the trade after this candle closed, right? Let's see. You could have just taken the long after this candle closed, and then you put your stop loss here, and then your take profits here, right? That's a cool 3:1. Okay, but we are targeting just 2:1. So I mean, by this time you would have taken your profits, right? I mean, at this point you would have just taken this trade, and then by this time you've taken your profit and you are done. No stress. You wait and then look for another reaction on this resistance. And so once you are trading support and resistances, you just have to wait for the reaction you get on the resistance, or maybe the support. Once you get a reaction like this, you know that you take the trade. Once you get a reaction like this, you wait for a double top and then you take the trade down. Very simple. If you are able to master this, I think it's going to do well. For those who want to trade on the 1-hour time frame, I think if you are even trading on the 1-hour time frame, you are still also, I mean, you are still going to see something, right? Because this one also went straight back into the zone, and so 1-hour time frame is cool. But you know, 1 hour time frame there some way. If you are trading on the 1 hour time frame and then the lower time frames, Charlie, I don't know. I don't like trading on the lower time frames because you always have to be checking. It's like you are always checking the market. You understand? It's like you are always anxious. You are always checking the market. If you are trading on the daily time frame, you know that you take your trade after the candle closes, and the candle will close after 24 hours. And so you are not bothered about what is going on in the market. You are really not bothered. You are just waiting to take the trade after 24 hours. So after 24 hours, you see the candle formation. You are like, okay, this means the market is about to go up. Let me just take the trade. You understand? So for me, I like trading on the daily time frame. Once I see what's happening on the daily time frame, you can go to the 4-hour time frame, and then yes, that will also be accurate. But then I'm just telling you. So you can master this strategy on any other commodity. For me, I'll just try it on cryptocurrency. I've not tried it on forex or anything. I've tried it on cryptocurrency, and it's good. It's going to keep you profitable, right? So you can master this, and then let me know in the comments. Let me know, sorry, in the comments box how it goes, right? Thank you.